Well, the market found its bull-bear line in the market today, and it's important. Hey traders, my name is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for November 14th, 2025. Well, I'm filming on November 14th. It's on a Friday. I'm going to tell you, this has been one volatile week. It's been a volatile week because we've seen the U.S. government reopen. We saw the buy the rumors, sell the news type of event. Then we saw the stock market rally off of its really critical support today. You know, there's a couple asset classes out there like Bitcoin, Swiss franc, yen. They're all suggesting that the markets are pretty fragile, which I'm going to go into a little bit later. And then remember, at the middle of this next week, we're going to have NVDA earnings. So there's a lot happening this week. And by the way, I was in the middle of filming this video. I had to restart it again because of some technical issues. So if there's something that I say again or maybe twice, you know what had happened. All right. By the way, if you think that these videos are great for setting you up for the week, make sure you give us a thumbs up. Subscribe to the channel. It is free to subscribe to our channel on YouTube. And this way, if you subscribe, you'll get this video when it first comes out. Also, it's free to comment down below if there's something I might have missed. And if you do like these videos, make sure you give me a big thumbs up. All right. Now, we're going to talk about all the events that are happening this next week. Next week is going to be interesting. Now that the government is reopened, we don't know when all the data that we normally get is going to come out. Like, I believe the weekly unemployment claims are going to come out this next week, but are we going to get October NFP? Are we going to get October inflation? I'm not 100% sure. So if you have ForexAnalytix, you'll notice on the right-hand side, we have Live Squawk. You can just follow every headline as it comes through. Like, one of the things that I do when I get up in the morning, I like to go back and read, okay, what did I miss overnight? I can actually read all the major headlines that are market moving. Keep an eye on the news because, you know, we will probably get a heads up next week on what is actually moving the market. But speaking of which, I'm going to talk about all the key events that are happening this next week. Like I said, I filmed this video earlier, or I started to film this video, so I have changed some of the charts a little bit based on what is happening until I stop filming. So you're going to have to excuse me. I'm going to feel like I'm saying things over again to myself, but you might be hearing them for the first time. And I have adjusted a few of the charts, but that's okay. We'll get through it all, as we always do. All right, so let's get through the events that are happening this next week, and you can follow along on your calendar right here, or you can just follow along with me, and we're going to get through it. So Monday, we have, and I have drawn on this chart already, we have Canadian CPI. Now, one of the things I wanted to talk about with the dollar CAD, I had made some adjustments here. That is because the dollar CAD, I'm looking at it as more of a basing pattern. See, if you look at it like this has just been building a big base. What that means is these topside breaks that we're starting to see should produce some upside in the market moving forward. Now, if you look at more currently, and let me just show you guys this because this is, I think, really important. You take this low to this high, right? You'll notice that the low this week was at the 618 retracement. That means we've retraced to the key 618 retracement. We were developing a descending wedge, and then we broke out to the upside. Now, the reason why that's really important is because with Canadian inflation, if inflation, CPI, is weak out of Canada this next week, we could actually see a pretty big move. We could break above this 38% retracement and move above 140.50. That'd be pretty bullish for the dollar CAD. All right, now the flip side of that argument is, let's say the Canadian inflation is really strong. Some of you guys live in Canada. You might have some better indications of whether inflation has been strong or sticky in Canada. Well, if so, and that is the case, you could actually maybe see a breakdown in the US dollar Canadian. So I think the dollar Canadian is going to be very much in focus right at the beginning of the week. That happens on Monday. Now on Tuesday, we have ADP employment. Now I'm going to go over to the euro, and I adjusted my drawings here earlier because I filmed this video earlier and I already did a lot of adjustments. The one thing that I did say in my earlier recording was the euro is very, very sloppy this week, and I actually lost money. I was short the euro. I took a loss actually this morning. I didn't like the way it's acting, or it's acted this week, and I think it's been really sloppy. But see, on Tuesday we get this ADP employment data. Now, that data is new as of like the last couple of weeks because we weren't getting the weekly unemployment claims from the BLS. So ADP put together their own private data for weekly release. Is that data going to matter this week? My opinion is it probably will because it's fresh, right? We haven't gotten a lot of employment data. And I'm not 100% sure if we're going to get weekly unemployment claims on Thursday of this week. The U.S. government, now the government workers are back. They're trying to fumble around, trying to figure out exactly, what data needs to go out, so on and so forth. I'm not 100% sure we're going to get all the data that we want or that we expect to get this next week. So the reason why I say that is because this might be the ADP data could be the data that actually moves us out of this range. But also, it could be the FOMC meeting minutes on Thursday, right? So, or on Wednesday, excuse me. And on Thursday, we're supposed to get Philly Fed, unemployment claims, existing home sales. But again, are we going to get that data? I'm not 100% sure. I'm not 100% confident that we're going to get that data. However, I believe the euro is going to be a currency that can move. See, if we break above this resistance at 116.70, I think that's going to be pretty bullish in the very near term. Now, overall, I have to zoom out and just make sure I give you guys a refresher course here every once in a while on what we've seen. The euro just completed this Gartley pattern over the last couple months. That's a big Gartley pattern, and we also got a false breakout, which means overall, I think that the euro on any rally has got to be sold, and we're going to see it, trade lower over the course of the next month, 2 months, 3 months, whatever the case may be. But that doesn't mean that in the very near term, we could see, a lot of volatility where we could actually see the euro pop back up, towards 118 before rolling over. The flip side is if we get back below 116 with any type of authority, the euro is going to be back on its heels, and we're going to be heading lower. So, I think that the euro is setting up for a very, very tight possible breakout. On Tuesday, we have the Australian wage price index. Now, the Aussie has been very, very, messy. But the one thing that I do want to point out is it's not very strong considering the fact that stocks are near all-time highs right now. So with stocks near all-time highs, how is it that the Aussie is not stronger? I know we have this conversation almost on a weekly basis, but we do have wage price index coming out on Tuesday night, which is Wednesday morning in Australia. If that number comes in weak, there's a good chance that the Aussie could get slapped right back down towards support. Now, I do think that the Aussie, this is all really critical support. Let me zoom in here a little bit for you guys. This is a 4-hour chart. This is exactly what I'm looking at right here because, let's go over to let me draw it out and then let me take you over to the daily chart. All right, so you see that trend line right there, but let's go over to the daily chart. You'll notice that the 200 DMA comes in where? Right at all this support, right? You can see it's a big, thick red line right there. See, if we break below that, oh my. If we break below that 200 DMA, I don't think I'd want to be long the Aussie dollar. If I was a bull and I said I own Aussie dollars, but we break below that, yeah, I don't think you want to be in that trade anymore, right? And I think that's what any Aussie bull is probably thinking at this point in time. All right, so keep an eye on that. All right, moving along. On Wednesday, we have UK CPI, and we also have South African CPI. Now, sterling has had its own pressures this week. There's a lot of budgetary pressures. Last week we were looking at, sterling possibly breaking out. It tried to break out, but it couldn't. And so the sterling is still trading really, really heavy in this descending channel. I'm going to delete all the stuff that we had drawn because it's just messy. The bottom line is we're in a descending channel. There's a budget that's coming out this month, maybe here in the next week or two, and I think that's going to be what drives the sterling moving forward. We have either, while we're below this 132.50, we stay bearish. We get above here, we might see a continued squeeze in the sterling. So I would be focused, 132.50. I think that's your big pivot. We also have South Africa inflation. Now, I want to talk about the Rand. I tweeted about it today. If you follow me on Twitter, if you guys don't follow me on Twitter, I am PipZAR. Let me see if I can pull that up for you. While I'm pulling that up for you, my Twitter handle, and I can show you guys exactly what I'm looking at. I'll draw it out for you in the meantime. See, what happened here with the US dollar South African Rand is we've seen us hit a brand new fresh low, right? But zero follow through, and now we're bouncing. See, this is one of those pairs that I told you a little bit earlier. I think we need to pay attention to it, because if you continue to see, your South African Rand, excuse me, let me show you guys right here. This is not that was the NASDAQ. Sorry guys, wrong chart. I posted about this a little bit earlier right here on the South African Rand. And the thing about the Rand is that when you see emerging market currencies like the Rand come under pressure, well, that's, to me, suggests that the markets, the risk appetite in the markets is really quite low. Now, why would it be low? Well, because, you're starting to see stocks sell off, and we're making lower lows. So if we're making lower lows, investors in the FX market don't want to hold as many commodity currencies, because if you take a currency like the South African Rand versus the US, you get to benefit from that higher interest rate that South Africa has. You just park your money in South African Rands, you sell dollars, and you sit back and let the money printing come. But when stocks get wobbly, what happens is investors tend to sell their emerging market currencies, and you can see then they tend to buy dollars back, and that's what's happened here. Now, what you're going to notice right here, and I'll draw it on the live charts, is you got a what we call a megaphone pattern. And now a megaphone pattern tends to come out the way it came in. So if we go into a megaphone pattern this direction, it tends to show a reversal. Now, if we're seeing the dollar Mexican, and I'm not sure if this is going to break out now, we could do this and this and this before we actually break out. But what we are seeing is we're seeing a rally off of these lows. So if we're rallying off the lows here, what that does suggest is that the market is very fragile. That means stocks. So just keep an eye on the US dollar South African Rand as we go into the next week, because we do have inflation. Now, on Wednesday, we have the FOMC meeting minutes. Like I said, on Thursday, we supposedly have some data. And then on Friday, we have UK retail sales, Eurozone, UK, US PMIs, and Canadian retail sales, which I've already shown you the Canadian dollar. So, there's a lot of things that are happening this next week that could move the market. And don't forget, we have NVIDIA earnings. You know who's going to talk about NVIDIA earnings, I bet? Nick from Trading Analytics. Nick, he's also with Pelican, and one of the things that he talked about, and I'm gonna talk about this here in a second. I asked Nick to produce the November performance in the S&P over the last several years. So in the last 5 years, we've had 4 out of 5 years, the S&P has actually rallied quite substantially in the month of November. So we're in that time frame where stocks can really rally, but does it mean they have to? They don't necessarily have to. So the one thing I want everybody to think about is most traders are probably positioned on the long side just from a seasonality point of view. But that doesn't mean that we have to produce upside this week. And when I come back, I'm going to actually show you how I see the S&P and where the possible breakdown point will be. But for right now, stick around, listen to Nick from Trading Analytics and from Pelican, and he's going to tell you show you what he sees, how he sees the market, and also probably go into NVIDIA as well. All right, Nick, take it away.
my name is Nick Groves with Trading Analytics. Blake, thank you as always for passing on over to me. Really excited to be here with you guys this week, and today we're going to cover the S&P, the NASDAQ, the Dow, Meta, which has been an interesting one, and I believe Google. So let's go ahead and get right into it. Taking a look at the S&P over the last, well, since May, it's remained in this channel. It's been really strong in this channel, and that's been quite intriguing to me. I'm looking to see if we break below 66.75. If that occurs on a daily close, that might infer more weakness. Now, I will also point out we're not too far from the 161% extension. That comes in, call it 7K, the big scary number that I don't think most thought we would get to this year. So that's a concern. It might want to get up there and tag that. But at the same time, look at the 3 drive that's occurred. You know, you had that high in September, another high in October, and then that 3rd high in late October. So this has completed a 3 drive, which does infer a potential breakdown. And I think that begins with the daily close below 66.50. Now, in the event that we were trying to look for some form of a zone to buy at, it's tricky. I think that a back test of any breakout is pretty common. A back test of the 2025 breakout would take us to 61.24. Now, that would be asking for a lot because look at, that's a 11.5% drop. That's not all that common. Garden varieties 3 to 5%. 8% would be nice as well. But we'll have to see what happens. So because of the moves in this range of fibs, we're talking about a move from the lows of April up. Stock market's moved 44.5% higher. I actually like to take the lows here from this May spike. And that would take me to be looking in between this zone right here. Sorry, let me grab the right tool. In between, call it 63.50 and 64.50. That's where I'd be looking for. You get a decent pullback, hopefully a little downtrend into it around 7 or 8%. Because the interesting thing about this current environment, or at least 2025, we didn't see a solid, downtrend, a seasonal downtrend at all. We didn't see it over the summer. Summer was quite positive. We haven't seen it yet in the fall. Sure, we had that bad day in the tech sector, but November historically does quite well. So this is an interesting time, and I do have a stat too to bring about that November to December period after post-election, which you'll notice is in late history, 53 through 73, it actually had quite, it had a negative drop on average, down 2%. Now, you'll notice some of that was in the Republican terms, and when you go to, history between the 70s and 90s, more Democrats and I'm sorry, it's actually split even, and it did actually, end up positive still on the year. In recent history, it's also been positive, mainly just a decline in 2005. We do now have a Republican president. We'll have to see how things play out going into year end. And speaking of the government, let's talk about the shutdown a little bit. It's been not so fun to deal with. Taking a look here at this stat from Blue Kerchick Market Insights. What you'll notice is that, we do tend to get some form of a drawdown during that shutdown, which I think we saw, and I might be wrong in this date, October 28th, something like that. We saw that solid decline in the tech sector. So we've had our little drawdown. But overall, the 12-month doesn't seem to affect. It remains positive 86% of the time. So we'll just have to see how our end of year plays out. And I do have one more stat. Let's take a look at the NASDAQ first, though. The NASDAQ, similar to the S&P, remains in this channel, and it actually went up to the 161% extension and had a throw over. So what that infers is that it's likely to break down lower. Now, same as the S&P, I want a daily close below this channel, something that shows some volume and some strength. So a close below 24,800 on a daily level would likely give us that, and I am happy to see that it went ahead and tagged the 161% extension. Now, as far as the fibs go, it's kind of a similar story as the S&P. A back test of the breakout all-time highs would take you to that 38.2 continuation fib, but that's also asking for even more. That's asking for a 14% decline. So again, I'm going to take that low from May here, and I would say I'd be looking around the 50% retracement. That comes in at 23,583 as a decent pullback. Something that we could see is potentially, a downward move cascading into here, and then some funny business, and we'll see what happens from there. I'm not entirely sure. I wish I had the crystal ball. Now, the Dow did get above the 127% extension from the highs in January to the lows of April. It also remains in a channel. A Breakovich channel would come in right around 46,550, and like those other charts, I'm going to be grabbing the lows here and take a look at kind of where I'd be looking for. Somewhere around this 618. I like the 45,000 level. We'll have to see if that plays out. Now, let's go ahead and pivot on over. Oh, I'm sorry, on the NASDAQ. I do have a stat for you. So the NASDAQ, kind of bringing back that conversation where we haven't seen a true seasonal decline yet. The last 7 months, the NASDAQ has been absolutely ripping, and that 2-week return from November 6th, we're starting to feel that now. It's actually quite negative. The 3-week can remain even worse. Eventually, though, a couple months later, it can actually begin to wake up again, with 1 year later being positive 100% of the time. Now, let's go ahead and dive into a couple of big tech stocks. One of the notable ones that has been a true wrecking ball is this Google chart. Google's made quite a lot of all-time highs this year since it started breaking, in August. One thing I would point out is if it's gonna make another leg higher, that 300 psychological level and just above it, 261% extension at 315. That's the zone that you're gonna want to see stop this train if you're trying to be bearish. But I will point out, and this kind of solidifies the idea this may be happening, look at RSI. We don't fully have a 3 drive yet, but it might end up creating one. So if you start to see that move higher, just know, hey, we might come in tandem with a 3 drive. This stock has done so well. I remember looking at this bull flag, back in October going, I don't think it's going to play out. Well, it did. It played out perfectly. So that's also another good sign for bears. This pattern's played out. Maybe it's about to be exhausted. As far as support and resistance, we kind of covered immediate resistance 292, psychological 300, and then that 315 extension level. But as far as like recent support, let's go ahead and get down to the hourly really quick. I would say that support is likely to remain nested somewhere near this 618. That comes in around 260. You got some highs here, high there. I would say that the 255, 250 zone should likely protect this stock in the event of a pullback. So we will have to see how that works out. Now let's talk about Meta, which has been pretty disastrous. Take a look at this daily chart. I mean, from the highs in September, Meta has fallen off 24%. And, and just in the last 2 weeks, really, it has just taken a beating. Now, it's finding stability at this 618 level. The question is it time to buy it? And I do have a interesting stat to bring for you guys. I generated this stat with Pelican AI. It shows that the last 15% crashes in Meta has actually shown a positive 1-week return and a 1-month return, with some of them being quite notable, especially on the 1 month. Those are some really high gains. So statistically, this suggests you should start buying Meta. That was not financial advice, and I don't even know if I agree with it because times might be a little bit different. But I did want to point this out, that after these declines in recent history, because 24% is quite a lot, right? Those how do I phrase this? Ambitious people who took the lows of April after a 20% decline in SPY, that certainly paid off. Will this one play off is the big question. I do think that this 600 level needs to be defended. And in the event it breaks, you're probably looking at whole numbers 550 to 540. There's not a whole lot in recent time frame to go off of. Now, if you're looking to fade this on a pop, The way that I would be looking at it is, okay, we're going to take the highs from August to the lows here, and I'd be looking for this gap fill to get filled a little bit. You know, I'd be looking somewhere near this 50% retracement, you know, maybe even a little bit higher to make sure that's filled. But right around 700 is where you should see resistance capped in the event this does end up having a nice, you know, what do you want to call it, 15% pop. And with that, I'm going to go ahead and pass it on back to Blake. Thank you as always for tuning in, and have a great weekend. Cheers.
All right, thanks, Nick. Now, Nick does record those videos while I'm recording this video, so I don't get to watch his piece until after the fact. But like I said, I wanted to show you the S&P anyway, because, see, the S&P, we talked about it last week. We talked about the S&P finding support. This is us last week. I want you guys to see it. So last week, we drew the trend line. It was actually drawn to right here, right? Because I filmed last Friday, and I said, hey, this is probably going to produce a bounce. You can see we got a bounce, and then it's going to roll over and break down. Now, we didn't break down. Today, we actually found support once again at that level. See, the greatest thing about price action is this. When you look at a market and you can say, right there, which happens to be today's lows, that is really critical support. If we break below today's lows, that's when the market turns bearish. That's how we identify a bull bear line. We can see that we've pivoted off of that trend line here, this one right here. We've pivoted off that trend line now twice, 3 times. Here, let me delete last week's drawings. This is from last week. I delete that, I'll delete that, and I'm going to delete that. So now that you've seen it, and you see we pivot there, 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 and today, right? Now you know exactly where the market turns bearish. So that means below today's lows, that's Friday, November 14th, we get below today's lows, that is going to be what we call a bearish event in equities. But does that mean that's where I want to sell equities? Well, why don't you guys stick around for my top 3 trade setups and my review of last week's setups, and I'm going to talk a little bit more about the S&P. So make sure you don't go anywhere. But I do want to cover a few other things. I do want to talk a little bit about NVIDIA, since NVIDIA is reporting earnings. See, one of the scary things about NVIDIA here, and we haven't talked about this chart in a while, and this is the level where I think it turns really bearish, but actually we can simplify it a little bit from here. See, you'll notice we had this false breakout above the 161% extension, but we have this rising trend line. So now we know if we break below that rising trend line, it turns bearish. But while we're above it, you can remain bullish. NVIDIA is going to be reporting their earnings on the 19th. If we break that blue line, this one right here, and I'm going to set an alarm on it. If we break that blue line, that is going to be a very bearish event for NVIDIA. And then if we break that purple line right here, that's where things get really ugly for NVIDIA. Remember, NVIDIA is the largest company in the world. It's the largest holding probably for most, S&P based funds, for ETFs, you name it. It's so widely held. And if NVIDIA does break, it's not going to be a pretty one. All right, so keep that in mind. I also want to talk a little bit about gold. Gold's been a big mover this week. Actually, you know what? I'm going to talk about precious metals on the review portion of this video. And guess what? I'm also going to talk about Bitcoin as well, because Bitcoin and gold were in our trade setups for the week. Anything else that I really want to cover? I do actually. I want you to take a look at this yen. This is the 6J. Now, what you're going to notice here is the 6J this is showing you how weak it is. All right, let me get rid of this. The 6J is really important. The yen has been a currency I've mentioned it a few different times over the last couple months. I'm having a very difficult time. That was my fault. Why that beeped here. I'm having a very difficult time really trading the yen, not because I can't read a chart. It's just because there are so many cross currents in this pair. But what we've seen this week is we've seen a break below this rising trend line, or you could call it a triangle, right? This is clearly a triangle. Let me fix that. Okay. And so breaking down means that the yen pairs are all strong. Now, if you look around at the yen pairs, like you have the euro yen, my colleague K-Man, he's been talking about this one a lot. I mean, check this out. I mean, look at how bullish this euro yen is. Now we are following a rising channel. This is something that K-Man was looking at this week. We've been looking at it in the chat rooms, obviously. Something that we should be paying attention to. Take a look at what's happening with the Swiss yen. The Swiss yen has absolutely gone bonkers. See, all this yen move is just showing you how the 6J is very weak. Now, I want you to just keep that in mind, because if for some reason we get above today's highs, that is going to, in my opinion, cause a bit of a squeeze. But for right now, we are still, in breakdown territory. All right, so just something I want you guys to be paying attention to regarding, I know that's regarding FX, but the yen is one of those pairs, and I was talking about, or one of those currencies, I was talking about, if we get yen strength, that tends to happen when the market is fearful. See, and if we get some yen strength like that, because the market is fearful, that means that stocks may come under some pressure. So that is something that all of us as traders should be paying very close attention to. All right. Now, this is the point in the video that I'm going to talk about the top 3 trade setups of last week, and then I'm going to give you my top 3 trade setups of this week. So let's start with the 3 trade setups from last week. So the first one was sell the euro at 116. And that trade I did take, and that I actually shorted it before we got to 116, and I closed it today at like 116.10 or 11, I think is where I got out. And by the way, if you want to know where I'm getting in and out of things, you can just go into the into the trades room, and you can see exactly what I'm taking a position in. Like in this case, Jethro was talking to me about what I'm doing in the markets and how he sees it. This is a great way for you to be able to have a conversation with me just in the trades room. But we also have a general chat room where we're all talking about, all the things that are moving the market, what charts everybody's looking at, how they're viewing the market. So if you want to be in a place where you can actually, have conversations with me 14, 15 hours a day, just be part of the ForexAnalytix community, and you can follow all my trades. Obviously, I do a lot more trades than the 3 trade setups that I'm giving you today. So, but this was one that didn't work for me. I actually sold the euro, and it continued to rally. And so as it came back down to 116.10, I got out of it and I took a loss. So first trade setup of last week, it didn't work. It was a loss. All right. Now, I know we're only at 116.12, and if you sold at 116, you didn't lose very much, but it's still frustrating, right? Trade setup number 2. Trade setup number 2 was short Bitcoin at 104 or 105,000. Well, Bitcoin got absolutely slapped. We made it as high as 107,000, and then we reversed. You can see the green line. I drew that for you guys last week. That one right there. Well, that happened, and yeah, we broke down. Okay, now here's the thing I want to talk a little bit just before so this trade setup worked. Yes, it did. But the one thing that I want to mention to you guys is Bitcoin looks very weak, and this is what we call a high beta trade, meaning it tends to move in tandem with equities. But when it's not going up with equities and equities come down, it tends to come down more aggressively. And that's exactly what happened in Bitcoin. Now take a look where it stopped. Bitcoin stopped at the 618 retracement. You see it right there? That's pretty important to identify, because what we know from here is if we break through that, it's going to get really ugly. Now, I know a lot of you guys are crypto traders or maybe hodlers, hold on for dear life, hodlers. just be careful. If Bitcoin breaks below that 94,000 level, that's going to be pretty bearish. But trade setup number 2, did it work? Sure did. Trade setup number 3, sell gold when or if the government reopens. The government reopened right here, and I sold gold. And I actually took 50 points off, and I should have taken 150. If you follow me via Twitter, I even mentioned it in my Twitter stream that I closed my gold. I think I mentioned it right. Let me get to it. I mentioned it right here. One of the trade setups at the end of last week's video was sell gold in if when the government reopens. I just closed my gold shorts yesterday, 23 hours ago. So, of course, I had to cover it here, but I don't always do that on social media. I just happen to do it because I think gold is a sell rally type of trade at this point. We're making a lower high, and that's a risk for long-term gold. Okay, so out of the 3 trade setups, one of them didn't work, but two of them did. So, not a bad week. Okay. Now I'm going to give you my top 3 trade setups of this next week. But before I do that, you're probably wondering, well, how do I take advantage of these trade setups? Well, there's a couple different ways. You can trade your own account, or you can trade somebody else's money. And that's where the trader funding program comes in. So if you want to learn about trader funding and how to get funded as a trader, all you have to do is go to our website, click right there, and you can learn about trader funding program. Now, there are two types of funding. You can have instant funding, or you can take a one-step assessment. So sit back, watch this really quick 2-minute video on how you can get funded as a trader. Are you looking to get funded as a trader? Why would you want to get funded? Well, the markets are extremely volatile. There's a lot of great opportunities, but because of the volatility, you don't want to risk your own money. You'd rather risk somebody else's money. That's why traders get funded. At Trader Funding Program, we have 2 different options that you can choose from. One, instant funding. That means immediately you can access up to $100,000 in capital. Now, by doing that, you have risk parameters you have to follow. You can't lose more than 8% on a trailing basis. That means as you're making money, you can't lose more than 8%. You also can't lose more than 5% intraday because we want to make sure you can control your risk. That is your instant funding program option for you. But let's say you wanted to take a more economical approach. You can access up to $1 million with the one-step assessment. Now, the one-step assessment, that means that you can't risk more than 6% of your high water mark to pass your assessment. That means as you're trading a demo account, as you make money, you can't lose more than 6% with an unlimited amount of time. Once again, you can't lose more than 5% intraday because we want to make sure you can control your own risk. Now, with either option, you have the ability to keep up to 90% of the capital that you make, 90% of your returns. That's pretty awesome. You know what else is great? With either one of those options, you get included in the ForexAnalytix community for a certain period of time. The ForexAnalytix system does analysis on 30 different instruments, everything from currencies to gold to indices, and it gives you different trade ideas, analysis, live squawk feed, so you're up to date on news, you have risk management tools, everything that you would need as a trader in your toolbox to help you become successful. But more than that is you're included in the ForexAnalytix community, the private chat rooms where you have access to me and other analysts from ForexAnalytix. Imagine being able to see what I'm trading, to be able to talk to me and other analysts and other traders and see what they're doing and ask questions. Why trade alone when you don't have to? You should utilize a company like Trader Funding Program for your funding needs. So check out Trader Funding Program for more information. I'll see you soon. Funding is a great option for a lot of traders. We were having a team meeting earlier this week, and I was talking to one of our support staff, and she's like, yeah, the great thing about, the trader funding program this week is we've had a lot of payouts. We've had a lot of people take cash out of their funding accounts, which is awesome. I mean, that's why we do this thing. So if you want to learn more about it, make sure you go to Trader Funding Program. And matter of fact, while you're on our website, make sure you register to learn about our upcoming launch of Trading Analytics. And this is how you join our newsletter. Our newsletter is free to join, and we actually give away, and we have been for the last couple months. Every month we do a drawing and give away Trader Funding Program assessments. So make sure you just put in your name, email address. You'll get a weekly letter from us, newsletter, updating you on what's happening with Trading Analytics, what's happening with our company. So make sure you do that. All right, guys. Now I'm going to give you the top 3 trade setups of the week. So the first trade setup is number 1. We're going to look to sell the S&P on a move to 68.40. Now you might be asking, well, why 68.40, Blake? 68.20 to 68.40, and I'm going to tell you why. Because you see here, what I believe is happening is the S&P is developing what we call a bearish wedge eventually. So what that means is if we get a rally, we're probably going to stop short of new highs. So if we make it up to 68.20 to 68.40, I'm looking for a fresh short in the S&P, for a possible retest of this rising trend line that you see here. All right. So that's trade setup number 1. Trade setup number 2, I am looking to go long the US dollar Canadian on a break above 104.50 because I think that's going to squeeze higher on a bullish breakout. I think we're going to be targeting new trend highs as a result. Trade setup number 3. Now this is a really, really big one, guys. A big one for those of you that trade precious metals. I'm going to be looking at silver, and I'm going to be looking at silver as a possible short back at $52. Now, why at $52? Well, that's going to be previous support, should be current resistance, and I'm looking for it to reverse. Now, the risk is above these highs, right? So you don't want to risk above that, but I'll be looking for a move back down into the low to mid 40s as a result. It's a big double top that's setting up. It's a bearish setup. And don't forget, and I know you guys have seen this because I've shown it to you. On the weekly charts, you have to go back to all the way back to, let's go to this chart you can see. Let's go to, actually, let me just show you guys what I mean here. If you look at the silver chart going all the way back to, this is 1980. That's 2011. I said 2008 or 9 earlier today. So obviously I was wrong. And then you can see where we're currently at. See, I think we had a false breakout, and this is just setting up for a move, a much bigger move back down to the mid to low 40s, right, on this big false breakout. So as a result of that, if we make our way back up towards $52 this week, I'm going to be looking for a short S&P or a short silver somewhere up here. I guess let's see if I can draw it a little bit better than that, because your risk. Your risk is above the highs. Now the question is, are we going to see a move back up towards $52? That's to be seen. Well, guys and gals, if you've enjoyed this video and you think this is beneficial to you, make sure you give me a thumbs up. Subscribe to the channel down below. Comment if there's something that I might have missed, which I tend to miss things on Friday afternoons. If there's something I missed, or you just want to say how much you appreciate the video. Any type of interaction you do with our videos, whether it's a thumbs up, whether it's a comment, that just helps our algorithm, or the algorithm for YouTube in circulating our videos. So by doing that, you're really helping out. I do appreciate it. And I do want to say I appreciate you spending your time with me each and every week. So thank you. I'll look forward to seeing you on the Monday morning Face Show, where I'll be live with Dale Pinkert, Ryan, K-Man, and Steve, and possibly Stelio. So I'll see you guys there. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.